The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, thanks for joining us this Thursday. This is just about time to start the Trading Studio with Andy Lindloff and Jamie Hodge. Before we get going, let me know on the questions panel if you can hear me and see that first slide. Thanks, Dave, Mike, Randy, Todd. Thank you, friends. Thanks, Bo. So before we get going, we ask a couple questions before our afternoon webinars. Please use that multiple choice interface to vote. Do you currently have an active subscription with us, yes or no? Lets us know who's in the room. Before I take the poll down, I want to remind everyone that you're muted. You need to use the questions panel to interact and answer in the chat. If you do have a question or want to request some kind of demonstration that you'd like to see demonstrated or talked to by the hosts, wait until they're taking questions from the audience. That way they'll see it. Otherwise, feel free to ask away at any time. So it looks like there's a majority in the house. 64% are self-reporting as subscribers. Welcome. And also welcome to the non-subscribers. If you do decide you want to start up today, grab the discount code we give out towards the end of the webinar. It'll save you some cash. Here's a quick follow-up for the subscribers. Are you on premium or regular trade ideas? If you're not familiar with the difference, you can always ask about more details, but the high-level points are the premium's the version that gives you access to the AI channels, the AIs, the ability to auto-trade AI strategies with participating broker, the ability to open up to 20 charting windows concurrently, access the RBI, GBI, advanced windows, do backtesting with the odds maker, all that kind of good stuff. We're always adding more. Let me share that out. So it looks like most have premium, close to 70%. If you're on standard and decide you want to do an upgrade, just grab the code that we give out later on. And we just decided to ask this question before some of the January webinars just to find out what the interest is. Would you like more automation, how to automate your trading through Brokerage Plus or manage your portfolio through Brokerage Plus discussion? Just select yes or no. We get a lot of support questions about this stuff, so it's good to know if we should weave some more of that into our daily webinars to expose people to how to use these tools to automate or manage their portfolios. So looks like we've been seeing a pretty similar response every day the last couple of weeks. So it looks like the majority in the room do favor seeing some more discussion about that kind of stuff. So we're going to record the webinar, have it up later on tonight or tomorrow. You will get an email reminder tomorrow with a link to the playlist where you can find that recording. And as usual, your hosts are Andy and Jamie. So I'm going to go ahead and click the record button and let them get started. Hey, how y'all doing today?
Hey, Scott. How are you, buddy? Hi, Jamie. How are you?
Hey, Andy. I'm doing all right. Hello, everybody.
Good, good. Yes. Hi, everybody. Thank you for joining us here today. They're still flying in here. We've been having some great attendance lately, and it looks like this is going to be no exception. And once again, thank you for taking time out of your day to join us. My name is Andy. That's Jamie, my sidekick, and Scott manning the controls. And let's just dive in, guys, after we go through the disclaimer here. Hello, Mike C. How are you? Hi, David. Hello, everybody. We are a content publisher, guys. We're not trying to get you to like buy certain investments or anything like that today. Okay, this is for educational purposes only. Nothing that you see or hear from Jamie or I should be construed as investment advice. Okay, if you are looking for that type of information, you want to seek out a registered advisor or a stockbroker, somebody who has a Series 7 license and can legally give you that information. All right, the agenda for today. This is going to be a fun day, I think, guys. The market recap, kind of an ugly close, but as we look on the charts, you're not going to see any real damage as far as the daily chart goes. If you're bullish, you never like to see a close like that, but we'll discuss, you know, what could happen. But really, like I said, there's no real damage. And then we'll do a Holly recap. Jamie will take over and handle that. And Barry shared with me, I guess it's a window that a lot of people were using in the room today and doing very well with. So in case you're not in the trading room, this is an option volume alert window, and I will share it with you, and we'll kind of go over and look to see what it's looking for. And as I was going through it today, there was, some really a lot of opportunity in there. All right, and then I'm going to talk a concept, something I invented called sway trading. Okay, Steve and I invented swing scalping way back in the day, and this is kind of a hybrid between day trading and swing scalping, if you will. So it's an interesting concept, and we'll go over it. And I'm actually going to do something that I probably haven't done in about 15 years. I'm going to pull over some of my trades. Okay, now I'm not going to look at any of the values or anything like that. That's not important. That's all relative to different people. There's no anybody that shows you these crazy numbers. I always take that with a grain of salt. Okay, the important thing is just keep in mind trading is relative, and it's not so much the size of your account. Okay, it's the actual trades. Okay, it's the trading. It's the all the things that go into making a successful trader. So we're going to take a look at this because it's a great example of the sway trading. I think it's going to be a kind of a little fun segment there. All right. Before we dive in, though, let's go over our 5-star support, education, and training here. Forgive me, you regulars. We have to do this for the new people who are coming in and maybe checking out the product, and or the ones that just signed up. They need to be aware of all the tools that we have and all the resources that we have available to them. One of them are these webinars. We have them every Monday through Thursday in the same 5 Eastern time slot. Jamie, myself, and Steve juggle a lot of these responsibilities. On Wednesday, though, Dan Merkin and Brad Williams, 2 of our top execs, take over the controls, and it's a great place to go for Q&A and to see a demo of things coming around the corner as far as bells and whistles go. And then probably the most important thing you see on this page is at the bottom where it says support webinar. Okay, this is every Monday through Friday at 12 Eastern. We just open up, actually we hijack Barry's live stream for 1 hour, and you guys are able to come in there and ask questions, and we answer them. And not only are we just answering them, we're also showing you, demonstrating you on the software if we need to. And in most cases, we do need to. This is why this venue is so much better than sending in an email and trying to get an answer about something trading related or configuration related, because you can actually see what's being done and not just getting a text answer back to you. All right, I'm going to save that one. That's Scott's going to go over that on the close here, but after we're done. But let me just back out and pull up the old spies, and we will take a look at the market, see where we're at. And before I show you the daily, let's just take a quick look at the kind of ugly close we saw here in the last couple of hours. Okay. So gap up today, small gap up, nothing big, tried to move higher and just kind of bled off kind of all afternoon and accelerated there a little bit on the close. But as we look to the daily, you're going to see there's not a whole lot of damage here. We didn't even take out, it looked bad, but we didn't even take out yesterday's low. So everything is still intact. And you can see here we have this upward sloping 10-period moving average creeping up under the price action. You know, there's a good chance maybe we open up and kind of rush down and maybe tag it and meet it and then go up from there. If we do break through that, okay, we're also kind of breaking a level right here, and there's a good chance we may come down and make contact with this 20-period moving average. And we are going into a weekend. So I guess anything could be on the table for tomorrow. We have been kind of going sideways all week. So although there's been some great stuff, some stuff moving, that's for sure. But as far as the overall averages, just not a whole lot going on. All right, let me, oh, this thing is freezing up on me. There we go.
No.
Let's take a look at the cues right quick. No, I'm sorry. I thought it was my ink, the Epic pen, Jamie. But it was okay. It froze up a little bit. And same thing, kind of just hanging out above our fast line, the 10-period moving average going kind of sideways. And IWM we'll take a look at. Not going to take a look at the Dow because, but look at that strength still there in the IWM, Jamie. I didn't even look at it today, but finished up 2%. That's relative strength, we call that. Yep.
Mm-hmm.
All right. Anything I need to hit on over there, Jamie, before you give your 2 cents on the markets and take it over for Holly?
Yeah, I think we've got it under control. Dave was just talking about how some bunch of Tesla calls are going to expire tomorrow. So yeah, sometimes that can add a little volatility.
Yes, it can. Yes. Well, we'll keep an eye on that for sure.
But we did just have a question come in there. Something about the change symbol box in the chart, I think he's referring. So you just
change symbol box in the chart.
You just start typing.
Yep. It's kind of confusing. I remember when we first got charts, I was doing the same thing. I started clicking. I said, well, where's my box? Where's my box? What you got to do is just you type one letter and the box will appear. Okay.
Indeed. All right. You ready for Holly?
All right. Yeah, I'm ready for Holly. You want to take it over?
Let me grab the baton here. Okay. You got eyes on me?
I certainly do.
Yeah, today's kind of strange for the AI. If we just kind of glance over here at the toolbar, you can see based around 100 shares, these are the totals that were produced today. 2.0 sitting on the bench all day, not kicking out any trades. Whereas we had 10 from the original Holly 1.0 and 4 coming from Neo. Neo just underwater a little bit. And by the way, these numbers here are based on taking 100 shares of each trade. These that you're going to see in my trade blotter are based on risking $100 per trade. So you're going to see different, sums and totals compared to what you're seeing over here, just for the record. And typically what I like to go over is finding the stocks that at the end of the day, we have a nice spread between conservative and a moderate profit, but lower in conservative and higher in moderate. We don't have that in SKT. Conservative risk mode was the best for that trade. And then we don't have any, we got a little bit of, we got $20 a spread here, but that's not even worth really analyzing. Same thing with Riot, having a $36 spread. What is prevalent today are what we call the trade rounds. And we can see we had 1, 2, 3, 4, 5, 6 stop outs out of 14. It's kind of high. Interestingly enough, Andy, just before the webinar began, I guess about 30 minutes before, I'm sitting here scrolling Twitter, and I'm seeing all these traders that I follow say the same thing. They all had losing days today. And it's just like what we always talk about. Look at this. I mean, we're just meandering around at highs.
Yeah.
But
doesn't make it easy, that's for sure.
These can be some of the more difficult days, along with a little bit of lackluster volume. So just interestingly enough, not the best day for the AI either. But having said that, making those observations about how difficult the day it is, it's very rare that we don't have any spread between conservative and moderate. And usually we're only going to have like maybe one decent trade around. But it's flipped today. And then putting that in correlation with what other people were saying, well, it's just interesting, in my opinion. So let's take a look at some of these trade rounds. Let's see. Let's look at Spice first. All right, this one was just dastardly. These are 15-minute candles, but let's go ahead and look at fives. Drill down a little closer. Okay, now we can actually see the 5-minute candle where the action occurred. And that was just a nasty little flush down. We got the classic wick down here. So this all happened. Let's see here. Spice. Yeah, see entry time here, 8:45. I would call that 8:56. 3 minutes later, wick out. All right. And then maybe you were in that trade, maybe you were not. You had to be pretty quick from a manual perspective to get in there. But the bottom line is this. You see the AI screen flash. You're like, yeah, I just got stopped out of Spice. So, you know, after that 5-minute candle closes and we get that sell arrow's kind of hogging up my space here. But I'm talking about this candle right here, right? That second candle opens up well above that wick, starts to green up. Could have taken a trade somewhere in that candle and used down here, just at the bottom of that wick as your stop loss. That's what we call a trade around. Yeah, the AI, crapped out on the trade, but it brought it to your attention. You notice this interesting wick action right off of the stop area, and then it never sees it again, and you get this whole run up here. Got close to seeing it again over here, but who cares after you're in here? It's all about, hey, manage that risk, take your profits, whatever you want to do. But that was a really nice trade around opportunity. Big percentage there. And then, of course, we're almost seeing the same level over here at the close. Okay, anybody got any questions coming through about any of this stuff?
Well,
well,
maybe not. Maybe, can you hear me?
I can. Yeah, I was just looking at Gabriel's question there.
Yeah, that's really the only one.
And the question is, what is Holly's accuracy with SPACs been? Good question. Good thought. I have no idea right now. I have not been tracking the SPAC activity, but it would be interesting to see.
Get Mike to run some numbers. Michael.
I think a lot of those, if I just pull one at random here, let's see. Oops, give me my pointer back, pen. I've got these plus signs showing up on my top list here, and these are going to be the warrants for those SPACs. So the common would just be FST. And a lot of them, it seems like the game right now, as far as the SPACs, before they do this, they're all just flatlining for very long periods of time. So they're not going to make their way into a lot of scans, unless you're scanning specifically for this type of activity. So, I know a lot of people, I know Dan did this on a handful the other day, and one just ripped up, I think it was a buck, and now it's at 6, but you got to be in them beforehand, right? So I think that's why a lot of SPACs aren't showing up, is because of the pattern that they've been, in for so long doesn't necessarily fit any of the ones that Holly is watching. However, that's good idea generation, right?
Yep.
So, okay, onward. I don't want to sit here and ramble and take up all your time, Andy.
No, that's fine.
Okay, so that was Spice. Now let's take a look at AFA. Now, this one, that doesn't look like
a stock.
I'm like, what am I looking at here? Okay, let me see here. Oh, you know what? I looked at the wrong thing. It was a profit save. Okay. Hey, my bad. My eyes played tricks on me there. ANAB. Okay. Nope. That was also a profit save. We did Spice. Okay. Well, earlier my eyes were playing tricks on me. I thought that one was also. But let's take a look at this one. It's small LVS. Yeah, That's not a candidate. And then this is good to point out, versus SPICE. What happened here? We bought it up here. Quickly, we get stopped out. How did it act at that stop area? It didn't meander its way around for a while. It didn't bounce up and make a wick. It just kept on going down, right? Now, who's going to sit that? Number one, this is not the pattern you're looking for in a trade around. You want to see it ebbing and flowing or wicking right around that stop area to act as that, potential mini trap. So really, the only one
for a long time.
yeah, the only one on the calendar that really did much of anything was the SPICE.
Okay.
So there you have it.
Yeah, it was one of those days, overall, she finished, I don't look at aggressive. Obviously, it's a very dangerous one. So looking at conservative, it was kind of definitely a ho-hum day. Yeah.
And that is another weird observation today. If you just threw caution to the wind,
I know.
You would have been rewarded, but the people that are usually being rewarded were not rewarded today. So that just tells you, hey, welcome to the market. Welcome to the market. All right, let me kick it back to you, Andy.
All right. Let me pull this over here. This one that Barry shared with me. And this one. I was looking through here, some really, really good trades. So Barry says, hey, hit me up today, or hit the trading guys up, and said, boy, we've been killing this alert today. I said, well, do share, and he did. And it's called moving higher with unusual option or strong options. So let's see how this thing is configured. I'm assuming it's Barry's, unless somebody shared it with him, which very well could be. But let's take a look at the configuration. And just a reminder, guys, we don't keep anything, except for Holly. Some of the, the configurations for Holly, obviously, we keep those under wrap. And but as far as our personal configurations that we use, we share them with everybody. I had a guy come in the chat online today, and he was curious about, he needs a breakout. And I said, we got tons of them. We got some really good stuff, and we do, and we share them, and you can find them pretty much all in the Trader's Vault. And maybe this one makes it in when I revise it, which I'm going to be doing soon. So let's take a look at the configuration of this moving higher with unusually strong option volume. And we just go to configuration. Okay. We go to the alert. We see it's a new high alert, pretty basic there. And we look at the configuration, looking for stocks from $1 to $25. So Barry likes those stocks under $30, around $25 range or lower. You get a lot of bang for your buck, on these things, and those are usually the ones that you get these incredible percentage moves in, where you can see easy 50 or 60% move, or even higher in one day. You don't catch that one on too many $200 stocks. Relative volume, okay, it's got to be 3. So that's strong relative volume. Looking for stocks that are doing relative volume 3 or higher, since this is a minimum. Volume today, it's already had to have done 500,000 shares today. Okay, so probably not one you're going to see too many. Well, I shouldn't say that. You probably catch them pretty early in the morning. But here's another kicker: count 30. A lot of people don't like this, because so what that says is the count says when you have a minimum of 30, that means it has to hit 30 new highs before you're going to see the first one come through your alert. People may say, well, man, I'd really like to catch them sooner. I want to catch them before they move. The problem with that is very difficult. And we get people to come in all the day and they say, Andy, I don't want to chase these candles. I want to catch them before they break out. The problem is I can find those for you, but I'm going to find, for every one that I find, I'm going to find 10 that don't move and don't go anywhere.
Exactly.
The setup may be there, but until you get that momentum, it's not momentum. I used to say in TI University, momentum is not just big volume; it's price direction in one direction plus volume. So this, you're looking for momentum. Okay, option volume today 500%. Okay, let's click on our little show me button here. The option volume today is at least 500% of normal. Well, just remember, anytime you see like a percentage of normal, just remember 100% is normal. Okay, so this is basically doing 5 times normal option volume, to put it.
Hey, Andy, and while we're in the configuration area there, Jim was wanting to know the logic behind the setting of 30 on the count.
Right. That's subjective. I've seen Barry. I don't use a lot of counts. I like to look for range breakouts. So I look for 10-day, 20-day ranges and things like that. I like to see stocks doing huge volume and breaking out of ranges. He likes to use this, and I've seen this for him be as high as like 50, 60. And it's like I said, it's subjective. You know, maybe you want to take this and only put 20 in there or 15. For some reason, Barry likes 30. And the wisdom is you have a lot of stocks that will hit 1 high, 2 high, maybe up to 10 highs, and then they fail. Okay. So if, let's say, 20 to 30 minutes into the day, you're seeing stocks hitting their 30th high, hey, that's a true definition of strength. It's a definition of momentum. It's what it is. I used to tell people every day, this is like when I'm playing this extreme volume high-low pro, sometimes I won't even take a position until after 30 minutes. Because what I tell people, I says, man, if you have a stock after 30 minutes of trading that is still hitting a high and doing these astronomical 1 and 5 minute volume, all that's telling you is how strong the momentum is. And more than likely, it's not just day traders in this stock. Okay, there's some institution, there's some big money going into it, and more than likely, it's going to continue its momentum if it 30 minutes after the bell ring and it's still hitting highs and doing huge volume. Well, the same, concept could be applied, I think, to this count of 30. Okay, so just a way to show a stock is really doing some good momentum. And we'll take a look at some of these to take a look. Option volume today, contracts wants at least 2,000 contracts done. All right. So let's dive in and take a look at some of these stocks, and let's see if I can put it on today. And I imagine it's going to say more available when it's done. Still loading. That's kind of unusual. Get the whip to those hamsters, Jamie. They're getting tired.
Yeah, they're old.
Yeah.
They're getting old.
Well, while it's still loading, let's go ahead and take a look. I'm not sure why I'm not getting the more available, or why it's not finished yet. That's crazy. But here's a great example. Okay. This is 8:53. Just like I said, almost 30 minutes into the morning. I'm on Central Time. Market opens here at 8:30. So 25 minutes. This thing is still doing big volume, and it's finally hitting this count is actually 52. I'm not sure why it didn't say stop and say more available. I'm not sure what's going on there. This is a new dev diversion, so I may have to test that when I'm done here. But look at this. Went sideways for about 30 minutes after that, and then look at that continued momentum. It kept coming through. Okay. See what else we can find in here. LXRX. And look at this. Almost 2 hours after the market opened. Okay. Boom. We get our first signal. I'm not sure why this. I don't know why it's not. This actually came through earlier in the day because let me try something. Let me do more available right now and see what happens. No, I'm not getting not sure what's going on here. I'll have to look into it. But nonetheless, we can just look at some of these charts, guys, and see, what happened. This one pretty much all day long. I'm sure it was coming through earlier as well because it's not showing the first count here until about, and look at these counts, guys. It goes all the way up to like 500-600. So you're not worried about missing the first 29. Trust me, when they have this kind of momentum behind it. And I'm sorry I'm not being able to pull up earlier stuff, but ORBC probably came out earlier. This definitely kind of petered out, and you can see why it ran into resistance. There's our red line resistance level. There's Navi again, LXRX. See what this RBAC. Now this one was up really quick. something happened there. Some news came in midday and you got some huge volume. It's weird.
Hey, Andy, do me a favor real quick. Go back to that LXRX chart. Okay, yeah, so Jim was asking about the red line, and that's because of the alert that's being used, correct?
Correct.
It's the new high.
Yep, the
So
red
it's gonna
line is your resistance, yeah.
Right, it's going to mark out that short-term level of resistance for you.
Right. Now, if I went higher here, let's go higher, see if we can get above around 820 level. And you should see it move higher. Let's take a look. And it did. It creeped higher. So there's a lot of little levels of resistance. See, it just kind of keeps creeping higher. It's pointing out the levels of resistance there. See if I can. Yep, there it went higher. So there was obviously, if I go back on my chart here, you're going to see probably some, then there you have it. There's a lot of congestion going back over here. It looks at the next high. Looks at the next high, and that's what you're seeing there, Jim. But nonetheless, I'm going to move on because I definitely want to show you the next stuff here. And there are some questions coming in, but let me go ahead and share this. Let me put this on real time. All right. And I am going to save and share this. And I'm going to drop it into the chat window, guys. Just look for, I'm just going to put highs options. And there you have it. Those who did not maybe get that from Barry's room, you have access to that now. And so maybe make it part of your arsenal. And let me move on to this kind of fun segment here. All right. So what did I do with that? I kind of made a Word doc here. There we go. All right. So what am I talking? It's kind of a goofy name, sway trading, but I got the idea because I noticed a lot of times I'm not day trading unless the market dictates it. You know, I'm kind of swing trading, but I'm ebbing and flowing with price action. And what that means, and when I go back and we look at the chart for the SPYs in December, it's going to make more sense to you of why I'm doing this, and you know how it can be very profitable. So sway trading it's like a hybrid between day trading and swing scalping. In other words, in swing scalp, I'm looking for a setup, and I'm looking for an explosive move to where I can possibly make maybe 10, 15, 20% on that move and get out in 3 to 5 days. Sway trading, I'm not so much looking for that move. I'm just finding myself a good entry. And then, like I say, I'm just kind of ebbing and flowing with the market. And if I don't, and letting the market dictate, you know, how long I stay in the trade, with the idea that I like the chart, okay, and there's a good chance I'm going to get back in it at some point, okay, but I'm not going to let it eat up my capital, and I'm not going to risk any gains, even if it's only, you know, 2 or 3% or less. Like I said, I'm letting the market dictate it. This is great if you have a small account. Okay, let's say you have a small account less than $25,000 and you want to build up that account. Well, this is a way that you can do it by not tying up a lot of your capital, right? If you're investing or doing longer term swing trades, you know, you may take a position of $5,000 and you may be in that thing for 3 to 5 weeks. Well, it's eating up your capital. And whereas, you know, if you just taking these quick pops, making 5% here, making, you know, 10%, you know, and just taking little pops here and there, anytime you sell, you're preserving that capital so you can go and put it into another trade or something like that. So, and it'll make more sense once I show you what I'm doing over here. So the pros of this is it's less risky because you're ebbing and flowing with the market. Okay, you get a nice gain, right? You're banging out your profits, and then so if it's about to pull back, or you know, an overnight position, you're down, you know, gap down or whatever it is, obviously you're in the stock less, so obviously there's less risk of it, you know, moving on it. Okay, tying up less capital, I've already talked about that. This method, you can build up an account pretty quickly. And when I show you what I'm talking about and you see, it's going to make more sense to you. Okay. you're avoiding HFT. Okay, so you're not day trading. Okay, so you're not going to get tied up in that 10 to 20 cent stop and things like that. You're taking a position, maybe based on 1% or 2%, whatever you decide. That's subjective. And you're avoiding motional stops. Okay, and once again, I think a lot of this stuff is going to make sense once we start dissecting what I've done. Cons on this method is you may miss a big move. In other words, you may take that scalp with the intentions of getting back in, and then what happens is it just keeps going. It's high frequency trading. I'm sorry, I should have made it clear. You're not getting, you're avoiding the high frequency trading because you're not day trading. I really think more people should trade this way. I really do, because I know I day traded for 17 years. I know how hard it is. And I've seen what Jamie and I and Steve and Michael have done in this fund that we trade. And good Lord, yes, and we kind of do a little bit of this, but it's more swing trading. So cons, you might miss a big move because you're getting out. Sometimes you just get out because you have a nice gain. You're not expecting it to keep going. You might miss out on the gaps. Obviously the next day you get out or it gaps up on you. And picking re-entries can be difficult. Okay, the more seasoned you become, the more screen hours you become in studying price action, especially charts that you might trade a lot or stocks that you might trade a lot. You're going to start to learn that they have a personality, and you're going to get a good feel for how these things trade. And then also you're looking at the market as well. So let me pull this up. First, let's take a look at the SPYs. Okay, this is what I had to work with. Okay, most of this was done in December. And there are a couple of trades in January. And this is all the same stock. But look, this is what I had to work with in December. A lot of chop, a lot of nasty chop back and forth. Okay, so not only am I playing the price action in the stock that I'm trading, but I'm also trading the ebbs and flows in the market. So a lot of times when you see that I got out, you may scratch your head like, why did you get out there? Remember, I'm also playing the market too. Okay, there's so many variables that go into how you're going to trade a stock or anything. So let me pull this over, and these are actual trades from my personal account. And of course, and this is Smith & Wesson. So let's pull up SWBI. And
the guns and the bullets have been high flyers as of late.
Yeah. Well, what's one reason I know they're selling like hotcakes. And if you look on the daily, I started getting interested in this thing, right around here. I think, as a matter of fact, you're going to see my first position was on this green bar right here. Okay, now that we've seen that, it was kind of forming a base. It was holding up to this kind of congestion over here, very sloppy, but I just felt a move was coming. And a lot of that is just kind of, instincts along with, thousands of hours of screen time. So, but that's not the point. The point is how I traded this. Okay, and you're going to see here, and I've actually brought over a calculator, and what I'm going to do, like I said, position size is all relative, guys. So you could be playing this with 100 shares, you could be doing it with 1,000 shares, or you could be doing it with 5,000 shares. Okay, in my example, I'm using 300 shares. Okay, so this is the way I traded this over this period right here. Okay, on December 4th, you can see I bought at 15.89, which is right there. Okay, because I thought it was actually getting ready for a move. There's some nice little volume coming in, but I wasn't. Obviously, it's not a day trade. Okay, so because it didn't and slopped around, that's okay. I was okay with that. Okay, because my stop is probably down here below 14.50, so I'm not too worried about this action. As a matter of fact, you can see I sat in this thing for 13 days. And then I got a move on the 17th, obviously this day right here. No, it was 15th. I think, I got a move on that day. Okay, I didn't sell on that day, but what I did is when it broke out right here and did not go and started and came back, I said, you know what? I don't have a lot in this, but that's okay. I'm going to pound out and take my profits. All right. So basically bought on 1589. I miscalculated this, didn't I? 16. I sold on what that should be $300 there instead of that one. So I'm going to add another. That should be $300. But anyway, that's not the point. All right. So what I did, I got out. All right. But look what I had to do. Okay. The thing set up again after I got out. So I jumped back in I'm okay with this. Even though it's 50 cents higher, that's fine. The setup looked like it was going to go again, and it did. And I jumped in on the 17th. I held it for 3 days. I got out at 18.11. Now, once again, I'm always playing the market. So that's on the 24th right here, right there. When I got that double wick right there, I said, man, this thing, it doesn't look like it's going to go. And that was a smart out. Look what happened. Okay. So even though I only took by 15, 50, 17, 60 cents out of it. Looks like I had two sales on this one. Yeah, it was right there and right there. Maybe that was the $150 one. Or maybe I didn't count that. But regardless, I put these numbers together really quick. Let's see. Buy.
You also received a dividend, Andy.
Yeah, but it was zero. Yeah, probably yeah, 0.000, like 10 zeros in a penny or something. No, I bet you because I sold it, it didn't pay.
Yeah,
anyway,
you got to be in there before the strike price or the not the strike date or whatever it's called.
Exactly. So look what I had to do, guys. I mean, I did it again. Okay, I bought it back on the 5th of January, and look at this right here. I think this is the 5th, right? So I bought. Now this one was a conviction buy because it's breaking out of these levels. So you can see right here. Not only I bought and added. Okay, so I bought here, and it pulled back a little bit more. I bought some more because I had conviction because it was breaking out. That was very good conviction because look what happened the next day. Now I got a nice profit. I banged it. I banged some out at 2020, and then I banged some out at 21.30. So overall, if you did that, it's about a $2 move. So if you had 300 shares, you're making $600. Okay. Now this one was the one that I sold here. Now look what happened right here. Because I sold, this thing was getting whacked on this day. Look where I picked this up. At the very bottom down here, I bought it again at 18.79, pretty much right on the 10-period moving average. So this is what I'm talking about. I'm swaying with the market. And trust me, it's a lot easier to buy these moves once you banged out and sold some up here around 21 and 21.30. So I got back in. What did I do? Let's see, where am I at? Okay, sold. I bought. Okay, then I sold right here. So that was another $2 move. So another $600. And then I bought it back. Currently, I'm in it. I bought it back on the 12th on this day right here at 2023. So I'm about a buck, what is that, 40 in the money, and still in this, hoping I'm going to get it. But you can see what I'm doing here. And even though you might say, well, gosh, some days, Andy, you're buying it back higher than what you sold it. That's okay. Let's put the tally to it. I tallied this up, and currently, if you were trading 300 shares, so you're only tying up about what, 6,000 in capital. Okay. And I made almost $2,000, or you would have made almost $2,000. Okay. And you probably would have made more if you had conviction and did and actually doubled your size like you would, like on this one day right here. And plus I'm in it right now. So if you had 300 shares at this recent buy, you're up another, $400 or so. So really you're talking possibly up $2,300 on this trade by sway trading. In other words, jumping in and out. Now, I don't have any. Now, some people would buy 300 shares down here and still be sitting in it. That is fine. And trust me, there's some stocks where I do that. Okay. I have more conviction. But when the market is slopping around like I did in December and I'm getting these, huge pullbacks, I love doing this style. And And trust me, if you start watching a stock, you're going to get a feel for how it trades. And this could be a very it could be a very effective method for some people. If you have a small account, you can't day trade, or maybe you're in your 401k. I do this a lot in my 401k too, because they don't let you day trade in most 401ks. I think some do, but some don't. So you can sit here and jump in and out. It's kind of and like I said, you're trading the ebbs and flows. And what happens is, once you pound out a couple of good gains, the psychological part of it makes it so much easier to buy when it pulls back. I think I may have missed one right around in here somewhere. Maybe not. But you can see it. It's what I call sway trading. You're just kind of flowing with the market. Okay, you're taking your profits, you're banging out quick. You don't have a whole lot of conviction in the market or the trade. And if you do, you can always keep X amount of shares. In other words, like I did in NIO for a long time, I always maintained a base position, and I'd still do this. I would still jump in and out with size, but I'd always maintain a position in it. And now I didn't maintain a position in this because I really just didn't have a whole lot of conviction. The daily was okay, but still was in a nasty downtrend, pretty sloppy trading. So just wanted to share that. It's just I'm trying to get more people to stretch out their trading and not get so tied up in the day trading part of it, because I know how difficult it can be. And a lot of people think if they have a small account, they can't build it up, without, doing day trading and using 4-to-1 margin. You really can. You really can. You're going to get 2-to-1 margin, and unless you're in a 401k or something, but if you have a cash account, you're going to get 2-to-1 margin. And if you have $15,000 or $20,000, you can really build up an account just by, applying a method like this, to where you're slowing things down. You're not using these tight stops. You're just kind of ebbing and flowing with the market. Let's see if I got some questions here. Oh, you're welcome, Ron. And trust me, there's going to be some times where you get out and it's going to keep going. That happens, okay? But just remember, you took a profit, okay? So it wasn't a bad trade. And in most cases, like when I first got out of this one and it kept going, I go, dang, man, I could have got a lot more meat on that lawn. This thing may keep going, but look what happened. Boom, gave me a beautiful entry right there to get back in and make another good trade. All right, so wanted to share that. I just think some people should, once again, slow things down. If you don't have the size capital to swing trade, that's a method that may work and help you build up. And look at there, like I was just saying, you were only tying up $6,000 worth of capital, and you just made over $2,000 if you're trading 300 shares by doing that. That's a heck of a return on 6,000 capital. So, and that's just over a period of a little over a month. That's not bad. Yeah, the hard part is once you start recognizing setups and you get that initial move, and you bang out, and then, like I said, then it makes it a lot easier to get back in. Okay. Of course, the hard part is, you can't be afraid to chase a little bit higher if the setup's still there, like it was on this day. Even though I bought 50 cents higher right there, I was fine with it because I already banged out some good profits, and now I got another setup. So, and remember, when you're banging out quickly, sometimes you're avoiding risk, and this is where the emotional stops come in. You're in this trade, you're down here, and then or bought it right here. And next thing you know, you're like, I'm not going to let this thing turn into a loser, and you're getting out for a flat. Whereas in this method, you're taking your profits and then looking for a re-entry.
So, Andy, we did have a question scroll through here. The question is, where would you place your stop in the second entry?
Oh, it's a very good question. That's a very good question. It depends. It depends on my entry, and it depends on the chart. Obviously, I like to use the technicals of a chart to choose my stops. And then I always apply methods. I'm a real big a proponent. If the stock doesn't do what I expect it to do, I am quick to pull the trigger and get out. But I still want to use something technical. I'm not one, a stock goes against me, I just sit through the pain and fight it. I'm not one that does that. There was a time, I guess all of us when we're new traders, yes, we would sit in pain for a long time. I've learned over years, you have to, if you're going to be a successful trader, to let your winners run more and cut your losers quicker. So I have been probably known to maybe pull the trigger and get out too quick if it doesn't do what I think it's going to do. But to answer your question, let's just pull over here and just take an example. All right. So let's say I banged it out right here. Let's say I re-entered on this 1750 right here. Okay. Bought it a little bit higher, about almost 50 cents higher on the 21st, which would be right here. Okay. So if I'm looking at this chart and I'm buying it right here on the 21st at 1750, okay, because it looks like it's going to break out again, I really wouldn't want it, when I say if it doesn't do what I expect it to do, which is to go like it did the next day, I really wouldn't want it to go past that level. Now, that doesn't mean, I would use that stop, because we're only talking about 1692. See, that would be a too tight of a stop. But so I'd probably use it right here on the fast line. If it closed below this fast line, I'd probably be out. So around 1650, so $1 right there on that trade. But you're going to learn. You're going to get a feel, for price action and ways different stocks trade. I mean, this is a typical pattern when you get a move and then you go sideways, okay, and then it looked like it was going to take out highs here, and it actually tickled it right there, and it did, and then we had a little fall through the next day. So that's a pattern where you go up and then go sideways and go higher again. Now, I did sell on this day right here. I'm glad I did, because that was just a warning sign to me. And remember, the stock, the market was, once again, we go back to the spies in December. The market was probably pulling down or doing something funky at the time, and I'm always playing the market as well. So stops are subjective, of course, to everybody. But if you're doing this method, they obviously got to be a little bit tighter than a normal swing trading stop would be, because you could always get back in. Okay, so let's say you got stopped out right here. So you could got in once it reversed, and it's a little more active trading, obviously, than swing scalping, but far less active trading as day trading. Okay. So let's see. Do you monitor the trade to exit, or you place stops? Good trade. Very good question, Christo. What I like to do for stops is I set my price alerts. Okay. So I'm in it right now, in the money, once again, $1.50, let's say. And let's say what I'll do is I'll set a price alert, and I said, well, if it breaks back down through this low right here, I'm probably going to get out, because that would probably be that would be close to a flat if it breaks that level right there. But once again, I'm looking at the market, I'm looking at its peers, I'm looking at a lot of things, and plus we'd have this moving average creep up here. So if this fast line is somewhere near that, maybe I would move this down, because that would basically be a flat. So maybe I'll just move it down to, I don't know, just below the 10-period moving average. But here's the thing, once you banged out, let's say you're trading 300 shares, you got a couple of $1,000, and I know you never should apply like monetary values to your stops, but it does make it a little bit easier to withstand some wiggles and jiggles a little bit more once you've been, sway trading a stock and you're up a couple grand in it. So, so, all right. You know what? I got to get on. I don't know if we're going to be able to do the contest, but I think, did we do it last time, Jamie? Look at my price alerts. I think we did.
I think so, unless I'm missing a week somewhere.
Did I forgot to clear the old ones? Let me do the created column here. You know what? I don't think I did I? I think these were old ones. Yeah, that goes back to the 10th. So I'm pretty sure I didn't. But guys, don't worry. We'll hit this next time. I know somebody had a couple of charts. You were going to remind me of it, and we'll get back on this once I get back in the swing after this new year. We'll get back on our little contest. That's kind of fun to share those price alerts. But I'm sorry, I'm just not going to have enough time today. But somebody had a couple of stocks they wanted me to look at.
I believe so. Let me scroll back up and see if I can see those symbols. I think CPSH was one of them from Yassine.
Okay. And Ron, are you talking about the MACD as a filter or on the charts? Remember, all you got to do is go to configuration and go to search and type in MACD, and it'll give you everything we have on the MACD. If you're talking about the charts, it will be coming soon. Okay, I'm on a dev version, and if I go to indicators here, you're going to see a lot more on my dev version. Okay, one of them is going to be a MACD line. This will probably be given to you guys in the next version. Okay, we're testing it right now. And let me get to, what was that symbol again, Jamie?
Yeah, we had a couple of them. CPSH is the first one.
CPSH. Very strong, nice volume. I don't know if you're in it. It's not something me particularly like to chase after it's gone from $3 to $10. If I'm in it, obviously I would have taken some profits, you know, right now. And then you've gotten a long ways away from your 10-period moving average. If I were hanging on to it, I would not want to see a bar reversal. In other words, if it tomorrow takes out this low of today, I would probably go ahead and secure my profits. Maybe one of those ones where I look for a re-entry if it comes back down to this 10-period moving average.
And also Sun W.
Yeah. Gosh dang it, I missed that when I was going to play that, but I don't know what I got. Same thing with the Sun W. You know, there's been a lot of interest in these kind of alternative energy stocks, electrical batteries and equipment and things like that have definitely been in play. A lot of the trade of the weeks have been these EV plays, and yeah, that's very powerful. Once again, not something I chase, something I would like to have gotten in right here. Maybe right here, once it pulled back for 3 days and then took out that high. It's a very powerful chart right there. Now, you know, if I'm in it, once again, I'd probably use maybe a bar reversal. I don't know if you're, you know, your time frame may be a lot longer, you know, than mine. But you know, me, anything that doubles or way over a double, you got over 100% gains in this. You know, you gotta, you know, if you're an investor, that's one thing. But if you're a trader, you know, I'm looking to take profits if it does a bar, anytime it does the next bar reversal. What about CGC? Yes, those were strong today, and I missed it today. Thought that was a very good opportunity. That's where I'd like to catch them. You know, that break above these top of these wicks right here would have been a beautiful little trade today. That was gap and go. So this one, I'd probably have to put on a weekly. And see where I got to go. And this is what I would do. You know, take a look. Maybe it's going to run into resistance right there. If it gets there tomorrow, you got a little bit of resistance there on the weekly for sure. Right around the 36.50 level. So could be a possible target. And looking good. I mean, some nice volume breaking out. I noticed TRLY was doing the same thing. So once again, same thing applies as that other momentums I told you about. You know, you just kind of want the moving average to keep forcing that price action. This is one where you might want to use that moving average if it breaks below it. That 10-period moving average, you get out. Bongo. And that one, I'd like to see, typically when they break out of a high like that, I like to see them hold it. Okay. It didn't put in a kind of what we call a topping wick. Doesn't mean that it can't continue the momentum, but usually I like to see it, it's come a long ways, guys, down from 50 cents to $7. That's huge. People obviously can't help taking profits when you get that kind of gains. So I'll watch it and see what happens when this 10-period moving average maybe reaches up to it. But definitely a powerful momentum stock there. It looks like it's some sort of biotech maybe. So be careful. Always be careful with those. A lot of them are, still working on the product and don't have a lot of revenue. See, revenue is only 7 million. So not a lot of it's probably on the come, we say. Okay. Thank you for aiming that. Yeah, we're out of time, guys. I got to bring Scott in here. I think I got them all. So, hey, thanks for your great attendance and good questions. And we'll bring Scott in here to walk us out. And you guys have a great weekend if I don't see you tomorrow in the support session.
Hello.
Scott, you ready?
Might be having, there you are. Hello.
Well, I'll start to walk out here. If he comes in, that'll be great. Guys,
I think that unmuted me there. Yeah.
Okay, we got you.
With my infrastructure here.
Okay, we got you loud and clear.
All right, cool. So on the way out, make sure you guys attend our daily support sessions during trading hours. They start at 12 noon Eastern, 9 Pacific. Just tune into our YouTube channel. The quick way to get there is to go to trade-ideas.com/live. That'll take you directly to where those sessions happen. You can open up the chat and ask questions, ask for demonstrations. There's a book on earnings. Go ahead and grab that. It's free, trade-ideas.com/earnings. It has some great strategies to take advantage of earnings seasons and has some cloud links that you can add to your layout directly from the PDF download. Go ahead and search for Trade Ideas Podcast wherever you listen to your pods. We've got a new episode coming out tomorrow or Monday, and it's going to be very interesting. So just go ahead and search for Trade Ideas Podcast wherever you listen to your pods. You can listen to a previous interview episode while you're waiting for the new one to appear in your feed. And there's a code, Holly New Year, 15% off your first month or year of any Trade Ideas subscription or upgrade. So feel free to grab that code, use it before the end of the month, and save on a new subscription or upgrade. You can find Jamie on Twitter at QuantBot, or Steve Gomez is at Today Trader. You can also find us at Trade Ideas. Trade Ideas Pro is the Facebook handle to find and like and share with all your friends. And if you have any questions, email us info@trade-ideas.com. Goes into the help desk software, gets you the help you deserve as quickly as possible. And the recording of this will be up later on tonight or tomorrow. So stay tuned for an update about that to your email tomorrow. And thanks, Andy. Thanks, Jimmy. Have a good one.
Thanks, everybody. I'll see some of you guys tomorrow in the support session.
Bye-bye.